Many of you have asked me about my opinion on Mastercard stock, so I decided to do an analysis on the company and compare it to Visa, which I talked about many times. I'm going to let you know if I believe Mastercard is worth the massive premium over Visa, or maybe Mastercard is too overvalued and we should wait for a lower price. So I really hope you enjoy it as always. Now, Mastercard and Visa, they have some kind of a duopoly, you could say, on the payment system, especially in the United States, with over 80% of transaction volumes coming through Visa and Mastercard. Visa is the leader, of course. It's an amazing company, but Mastercard has also been growing rapidly. It's slowly catching up to Visa. It's going to take them a while, but Mastercard's growth has been very impressive, and it's an amazing company in general. Now, my favorite part about the business model of Visa and Mastercard is the revenues are pretty much indexed to inflation. So if we have high inflation like we had in 2021, and let's say the average ticket goes up by 10 or 15%, Visa and Mastercard are going to automatically collect 10 or 15% more in those volumes because of the fixed fee. The fee is fixed, but if the ticket price or the average prices, they go up by 10%, the revenues are going to go up by 10% automatically without them having to raise prices. So their volumes and their revenues are indexed to inflation, and this is actually one of the best inflation hedge you could own is a company like Visa and Mastercard. Mastercard has been rapidly expanding their credit cards. I believe they have over 3.3 billion credit cards, or you could say Mastercard cards, which is impressive. I'm not sure if this is accurate because it sounds like a lot, but many people have multiple cards, and I would not be surprised if that ends up being accurate. The last report from Mastercard was absolutely insane, with 17% adjusted, or on a currency basis mainly, or I should say 15% revenue growth it was. But this was very impressive in my opinion. Their earnings per share is around 11%. That was due to some one-time tax increase. It's not going to repeat again, but 15% in revenue growth for such a large company, in my opinion, it's very, very impressive. And the revenue growth has actually been re-accelerating from 10%, 11, 12, 14, 14, 16. Now it's at 16.7, and this is very impressive from Mastercard. And the revenue growth has largely been driven by their value-added services and solution, which has grown 22% on a currency-neutral basis, much more than the payment network of around 10%. So their value-add services is a huge, you could say, is a huge advantage for Mastercard, and it's been boosting their growth in a major, major way. Now, Visa also has their own value-added revenues, and it went up 25%, which is actually growing a little bit faster than Mastercard's value-added revenues. Now, in terms of Visa versus Mastercard, this is where I'm going to get a little bit bearish on Mastercard. And if I compare the growth, the revenue growth of Visa and Mastercard, Visa is in the blue and Mastercard is in the orange. For example, in 2021, Mastercard has grown more than Visa. 2022, Visa has grown more than Mastercard. But really, I mean, Mastercard has, on average, grown above Visa around 1 or 2% more in revenues. And in 2025, so far, they are equal in terms of revenue growth. So the revenue growth gap between the two is not as impressive as a lot of people believe. Now, the worst part about it all is Mastercard is spending 10% more or 10 points more in rebates and client incentives just to grow on par with Visa, or 1 to 2% more. But this is not what you would be expecting from a younger company. Normally, as a younger company like Mastercard has longer runways than Visa, so it should naturally grow above Visa's revenue growth without having to spend crazy on rebates. But in terms of Mastercard, they're spending about 38% of their gross revenues on those rebates versus Visa's of around 28%. This is a big difference, and despite spending 10 percentage more, the company is only growing 1 or 2% more in revenues, and sometimes they're even growing flat with the leader, which is Visa. So in my opinion, that's a good way to take market share and to grow, but I'm I'm not really impressed. I would be expecting much more from Mastercard's growth if they're spending 10% more of gross revenues on rebates and client incentives versus Visa. And if you compare Visa and Mastercard's net income margin, due to Mastercard spending 10% more on rebates, Visa's net income margin is around 55%. Mastercard's net income margin is around 45%. So Visa's net margins are around 10% higher than Mastercard, and Mastercard is spending 10% more on revenue growth to grow the revenue by like 1 or 2%. And lately, it's been pretty much the same revenue growth. And by the way, I'm using fiscal.ai to come up with those charts. If you want to try it out, they give you 2 weeks of free access if you use my link in the description. But it gets a little bit worse for Mastercard, in my opinion. And I'm not really hating on the company at all, but I believe every company has some concerns, it has some risks, and we have to, talk about them and be aware of some challenges. There's no perfect company, and each company has its own things. Now, when I'm comparing Visa and Mastercard, and this is accurate from ChatGPT, and I'm gonna back it up by some data, because here I showed you the value-added services of Visa. It was around 3 billion. Here, ChatGPT is also showing us 3 billion for Visa. Now, in terms of the value-added services segment, which is the crown jewel of Mastercard's growth, it makes up 39% of the total revenue of Mastercard. Visa, it makes up around 28%. Now, you might say, why is this such a big deal? Well, if it's already 39% of Mastercard's revenue, it does not have as long of a runway as Visa's revenue in terms of the value-added services becoming larger as a percentage of revenue. And keep in mind, Visa has many more cards and many more customers than Mastercard. So I believe in terms of the setup, because Mastercard is growing and it has accelerated, but that's because the value-added segment was making a larger percentage of revenue. Now it's already 40% of revenues. I'm not saying it doesn't have longer runways. It cannot become 45 or 50%. It's very, very possible. But I'm looking at Visa, where Visa is growing now pretty much on par with Mastercard, but their value-added segment is still only 28% of total revenues. So I believe Visa here has a longer runway in terms of the growing the value-added segment versus Mastercard. Now, comparing them a little bit further, and we look at their earnings per share growth, in 2021, Mastercard has absolutely destroyed Visa in terms of earnings per share. 2022, Visa has destroyed Mastercard. Visa grew around 24% earnings per share, Mastercard 16%. 2023, Visa grew 18% in EPS, Mastercard was 15%. And in 2024, they pretty much grew on par. So if I look at everything I showed you, the companies are pretty much growing the same on a growth rate in terms of earnings per share. Revenues maybe 1 to 2% more for Mastercard. Mastercard is spending more to attract customers through rebates, 10 points more. So Visa's net income margin is 10 points higher than Mastercard, and Visa's value-added segment is only 28% versus Mastercard's 40%, which gives Visa longer runways in terms of revenues to grow the value-added segment as a larger percentage of the overall revenue. So I'm pretty much getting the same setup, the same company. Visa has a little bit higher margins, Mastercard has a little bit more growth, but if Visa spends more on value-added, or I should say they spend more on rebates, they can potentially boost their revenue growth even more, and they're deciding not to do it. So I'm pretty much getting the same setup. But how much am I paying for those companies? I'm paying 29 times forward earnings for Mastercard and 25 times earnings for Visa. Now, do you believe, after everything I showed you, that Mastercard is worth 29 times over Visa, over the legacy company that has a much bigger business than Mastercard, and it has, in my opinion, longer runways in the value-added segment? It's not spending as much on rebates, yet it's still maintaining very decent revenue growth, and it has higher margins than Mastercard. So do you believe Mastercard is worth 4% more than Visa, or 4 points more in terms of earnings per share, or I say forward PE ratio? I personally don't think so. Now, the market has believed otherwise, and the premium of Mastercard has remained, since I believe it mainly got a premium since 2019. It has, you can say somewhat consistently maintained this premium. But in my opinion, betting on this premium continuing is a dangerous value proposition. I'm not saying it cannot happen. It could very well happen. But I personally would not feel comfortable betting on the premium of MasterCard at 29 times when I can get an amazing company like Visa with a lower risk of a multiple contraction at 25 times forward earnings. Now, one reason why MasterCard could still be trading at a higher multiple than Visa is the expected earnings per share growth. And again, that's expected, so it's not guaranteed. For MasterCard, they're expecting 16%, 16.5%. For Visa, they're expecting 13, so around 3% more of growth for MasterCard versus Visa. But again, guys, with the setup I showed you, with Visa's value-added services being lower, with Visa spending 10 points lower on rebates, they can easily change those metrics and boost their growth if they chose to do so. So for me, again, looking at the setup, I'm personally not comfortable paying 29 times earnings for MasterCard. I would feel much more comfortable paying 25, 24 times. And when I bought Visa, it went to 22 times earnings. And that was back, I believe, in late 2022, it went 22 times. And sometimes they do go there, and that would be like a great opportunity to buy them. Because the biggest risk when you're buying a quality company is the risk of a multiple contraction. So we know that this is a high quality company, but it does not mean it's worth infinity. And the biggest risk we have is a multiple contraction, and we have to do our best to kind of prepare ourselves or to hedge ourselves against it. Now, in terms of the upside potential for MasterCard, I put in their current earnings per share for 2025 that's expected of 16.31, and I put them at 16% earnings per share growth for the next 5 years. It's not going to be easy to maintain 16%. It could drop to 14%, 13%, 15%. But I gave them 16% for the next 5 years. It could possibly happen. The current P is 29 times. I kept it at 29 times. In this case, if I'm buying MasterCard today, I would get around 86% in total, or 13.5% annual return over the next 5 years. To me, this is not a bad return. But if I want to double my money over the next 5 years or get a 15% CAGR on an annual return basis, I would have to buy MasterCard around $497 per share, or that's under $500 per share. Now, the biggest risk remains that the MasterCard premium, I think, is a little bit high. Now, what if over the next 5 years, the growth of MasterCard deteriorates a little bit, maybe more competition from stablecoins, and MasterCard trades at the same multiple as Visa? It has happened. It has happened many times before. You could see it here, and maybe it will ultimately sustain itself. Now, what if MasterCard goes to 26 times earnings? Let's just take this scenario into consideration, because that's the biggest risk, is a multiple contraction. It's not much about the business not doing too well. So 26 times earnings for MasterCard, I would only be getting an 11% annual return if I'm buying it today, or 67% on the upside. Now, in this case, on the worst case scenario, if I'm trying to be conservative, if I want to double my money over the next 5 years, I have to buy MasterCard at $445 per share. That's around 17% lower than where it is today. Now, I'm going to be honest with you guys. It's going to be hard for MasterCard to go to 445. It's not impossible. It happened to many stocks. Copart's going down. It's a great company. Constellation Software. There's many of them where it's been holding up, and you never know when the market changes its mind and then the stock trades at a discount. I mean, you really never know when it happens. But I'm being honest with you guys. I mean, the average multiple is 33 times. Now trading at 29 times. So if Visa trades, or MasterCard, if it trades at 33 times 5 years from now, then you could be looking at a much bigger return than 13% a year, up to 15, 16% a year, or it double every 5 years. So it's not really a bad stock right now, but I would not say it's a generational buying opportunity. I would not say it's the opportunity of a lifetime, especially with so many stocks like Meta and Amazon and Uber and so many stocks growing 20, 22% earnings per share, they're going down with wide moats and great companies in general, and they're not trading at 29 or 30 times earnings, and you don't have such a big risk of a multiple contraction that you have with MasterCard. So I love MasterCard. I think it's an amazing business, and I think it's just an amazing company in general, but I personally don't feel comfortable paying 29 times earnings for MasterCard. I'm not saying the stock can't go up. I'm not saying it cannot deliver a 13, 14% annual return. I can easily see that. But for me, for MasterCard to be, you could say, a generational buying opportunity, I have to protect myself in case the multiple goes to 26 times, because there's a lot of innovation happening in the payment systems with stable coins and others, and MasterCard and Visa, they're leading the way and they're benefiting from stable coins. But a lot of innovation is happening, changing and the world could look different 5 years from now. But I'm paying 29 times. To me, that's close to perfection. 26 is 445. So for me, I would love Mastercard at 445. If it doesn't get there, I think, it's not a bad buy over here. But that was just my opinion on Mastercard and Visa. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.